Welcome to Coffee and Crypto with Lee and Jimmie. I am Lee Reiners, joined as always by Jimmie Lenz. Jimmie, happy Friday, my friend.
Man, I'll tell you what, it has been, for summer, I'm like busy as hell. I don't know what's going on. People are like, oh, well, you teach. And it's like, I do more stuff than just teach, right?
You got a couple side hustles.
I do kind of have a couple side hustles. Yeah, I
But
do
it
a lot of work.
informs your work, right? This is one of the things that I love about you, man, is that you are not some pie in the sky academic. You're doing real work.
Doing real work.
And you're bringing that back to your
customers.
students, right? It informs your teaching, it informs your classroom.
Absolutely.
And then it also obviously helps, with students getting internships and jobs and whatnot.
Yeah.
So it's a virtuous flywheel, my friend.
I mean, people who are 100% academics and all the tenured people out there are going to hate this. It's like, how do you stay in touch? Yeah, well, how do you stay in touch? If you read most research that is produced by academics, it's kind of crap. It has either no application in the real world, it's very dated, or, it just doesn't apply to anything that's ever going to happen. That's not 100%, but a good bit of it. And I think a lot of that is because people are so removed from the real world. Get out in the real world, work, see customers, listen to people. I mean, me, I'm at conferences, I'm working at, other companies, and I love doing that. We do bring, students. I was at Insight a couple of weeks ago. We had students there.
The big Encino conference, yeah.
We're going to have students there. I'm going to be over at Charlotte FinTech Week next week. We'll have some students there.
Oh, wow.
Charlotte FinTech Week is next week. RevTech Labs, which is, Dan Roselli's kind of baby, is one of the big sponsors there. But I mean, obviously all the big banks are in Charlotte and stuff like that.
Yeah.
It should be fun. Me and John Fimble, who also teaches in the program, but who also works outside, will be there. And then the week after that, we're up in Jersey City, New Jersey.
Oh, yeah.
To visit with DTCC.
Perfect, man. Perfect. The Jimmie Lenz World Tour.
It is.
That's just like art, just like exactly. Oh, just like musicians, summer is the big touring season, right? That's
Are you seeing anybody this summer? You seen any concerts this summer yet?
It's funny. My wife is actually going with her friend to see the Dave Matthews Band tonight.
That'd be fun.
At Coastal Carolina Credit Union, but I will be at home. I'm not as big of a Dave fan. Her and her friend, they've been to 40 plus Dave shows over the years.
Dave shows, yeah. Dave has a loyal following for sure.
Yeah, man. I wasn't like, obviously I've long been familiar with Dave. Wasn't ever like I liked it, but it wasn't never, my sort of jam. And but yeah, once kind of I met my wife and sort of got immersed in Dave culture. Like you see it everywhere, like the Dancing Nancy stickers on the cars and whatnot. So very loyal following. I mean, he does put on a hell of a live show. He puts a lot of effort into it, which I appreciate, and he mixes it up. It's not just like the songs as you hear it on the on the record, right?
Yeah.
So he really is a musician. So I appreciate that. But I was happy to sit this one out tonight. I'm tired, man. I've been staying up late to watch these Hurricanes. Big overtime win last night.
Big wins. Big
overtime win.
You cannot avoid it if you are in the RTP area. You cannot avoid Hurricanes at every turn. And I'm not a huge hockey fan, you know that. But man, you can't avoid it at any turn. I mean, every place you look, Hurricane stuff up.
That's right, the Caniac Nation. Yeah. So that's very exciting. So series is tied up 1-1, and then heading to Vegas. So Game 3. Vegas Saturday night, but let's dive in. So a lot of excitement, Jimmie. A lot of excitement,
a lot of stuff this week
in crypto, as always. I mean, look, there's never a slow week in crypto, and even like sometimes because I'll send you the agenda.
Yeah.
Kind of the night before we do this show, folks. Right. So this is not. I think people have noticed that this is not a very high production quality.
You think?
Well, I don't know. We try. We do try.
We do try. We do try.
But basically, like these are kind of all things that we've probably, Jimmie and I have been reading about and thinking about anyway. So I don't think, when I send you an article, like anything's like a surprise to you. But just this morning, I was thinking, oh, shoot, should we talk about this thing? Because I don't know if you followed the Zcash thing. So like there was a flaw in the Zcash base code.
Yeah.
And I was like, shit, like we should talk about that. But I'm like, no, there's not enough time to like prep for it. So anyway, we'll tee that up for next week.
We have to talk about the perps.
we'll tee that up for next week. Let's talk about the perps. I think that's definitely the biggest story of the week. We've talked about perpetual futures on this show multiple times, Jimmie. And, the points we were making was, look, these are wildly popular products. Okay.
Really popular.
Trading in perps for crypto is the underlying far exceeds just spot crypto trading, right? So the volumes were just enormous. And more importantly, Jimmie, most of that trading, if not all, frankly, happened overseas. So these were products that were mainly available outside of the United States exclusively. And that is now changing, because the big news this week, Jimmie, is that the Commodity Futures Trading Commission is allowing perpetual futures on Bitcoin to be listed by Kalshi and Coinbase.
Okay? And they've opened the door to other products, to perps on other products. And for I get commercials. I get questions all the time about perps. Why perps? What's different? What are people doing with them? We actually, Alessio Barini works here in at Duke with me. We actually did a paper on pricing cryptocurrency options with machine learning back in 2024, so a few years ago.
Oh, wow.
Because we were concerned around the pricing, in particular of perps, but of all options that we're trading in this space. And so, to my point, why perps? What's so what is it about them? Well, I mean, a lot of it is the way that they operate is different. One, you get a ton of leverage, and leverage is in trading. When you're trading, I would say professionally, but even when you're an active retail investor, I mean, leverage is king, and perps give you a lot of leverage, just like an option does. I mean, you figure you can control. I could control MU at a fraction of the cost. I could get full exposure to MU by buying options or selling options, depending on which side of the equation you're on. And so perps are a way to get leverage because they're perpetual. There is it takes a little bit of the pricing equation out of the mix, and pricing is time is a big element in any kind of pricing things. And then they true up every day. And so it's more like a future in that sense, in that they true up every day. So if you have a movement in an underlying security, basically what you're doing is you're buying exposure to the movement of that particular security. And so you can hedge yourself and do things like that by, dealing in perps. And the only difference really between perps and a different kind of option, as I said, is there's no expiration date. Or it's way, way, way out. So essentially there's no expiration date. And so you don't have to worry about what we call decaying, the decay that occurs in the premium for, and the decay in the premium is just as something gets closer and closer and closer to the expiration date, you have the premium decays. And that's kind of some complex math to do that. And it's not linear, it's exponential. And so with perps, you don't have to worry about that. And so you truly are buying exposure to an underlying asset using leverage.
Yeah, I think that's a good point. Just bringing it to the base level of like, why would someone be interested in these? And it's really about the leverage is the key point.
Yeah,
right. Leverage is the key point. Obviously, I think the 24/7 trading. And let's be honest too, Jimmie. Some of these platforms, and I know we're going to talk about Hyperliquid in a second here. Also don't do KYC on their customers and whatnot. So,
right.
So obviously that's going to have a certain appeal to some folks, but it's really the embedded leverage, because the whole point of perps is that the price of the perp should be equal to the price of the underlying, right? And the way it gets there,
the underlying, with the premium for volatility and things like that.
Yeah, I mean, well, there's a funding rate mechanism, and so how does it do that, right? How does it do that? And look, another thing about perps is like you don't have to, if you want exposure to Bitcoin, like you can do it via perp, and you don't have to deal with private key storage and all that stuff too.
No,
right? So
you can get full exposure without doing that. And options,
So,
people forget sometimes how popular options are. I mean, options have exploded in the last 10 years. I mean, I've been trading them since the beginning of my career. And it used to be they were, a lot of them were really thin.
Well,
and it was hard.
Zero a day, yeah.
Yeah. And now, I mean, and that was when I started trading them, they were only quarterly expirations, right? Every 3 months they would expire. But now we have daily options and things like that. But the use of options has just gone through the ceiling all over. And another point I think here with perpetuals is perpetuals have been very popular offshore for a long time, but different markets are different. And in some of the Asian markets in particular, there have always been different kinds of options that structures that didn't trade here in the United States. They used to have something called knockout options and perpetuals and things like that are just basically structured in a very different way than American or European options. Most people learn surprisingly how to price European options, not American options, because American options are harder to price. European options can only be exercised at expiration. Yeah, and so it's for the math is easier, basically. That's why they teach it. Sure. But when we're thinking about these, don't think about them as, they came from offshore and they're kind of a strange thing. It's like, it's always been that way. Different markets have traded different kinds of structural options. And it's, why they've just come up that way. Regulators have thought, something was too risky or whatever. And so that particular kind of structure wasn't allowed in certain jurisdictions. But this idea of perpetuals and other types of options trading in different markets, that's fairly common.
But perps they're a lot different than options. But the whole point, they're billed as futures, right? This is the whole premise, and we'll talk about that. They're billed as,
more like futures.
This perpetual futures is the term that's used.
Yeah.
And we'll talk about what it actually means to be a future and whether there needs to be expiry or not. But with an option obviously gives the buyer the right but not the obligation, right, to exercise it at the strike price. And with a perp, it's like you're getting the exposure to the price of the underlying. Right. And again, the arbitrage mechanism there is this funding rate, right? Mm-hmm. So if the price of the perp exceeds the price of the underlying, then the long holder has to pay a certain amount of money to the short. And that then attracts more short interest, right? To buy, and then it brings the prices in line. Okay. Right, and I think, and depending on the platform and whatnot, I think that happens on a daily basis.
It happens on a daily basis. And that's the way futures work too. So futures true up. Basically, you get a margin call every day with the future. If I own oil futures or corn futures or something, I'm going to get a margin call, and the call could be a credit or a debit. Every day, it kind of trues up. These work exactly the same way. They true up every day. But again, you don't have the time element that you have in a future.
And so let's just get into like kind of what happened here. So, again, perpetual futures were not widely available in the U.S. to retail investors. Okay. And I think there were some platforms that had perpetual futures, but they were kind of like cheap imitations. Like they weren't technically perpetual. They might have had like 10-year. I think SIBO had like a 10-year expiry.
SIBO had a 10-year. Remember they were talking about that at Digital Assets a couple of years ago.
Yeah, that's right. That's right. And there's also been a debate from a regulatory standpoint in terms of whether perpetual futures can actually qualify as a futures contract under the Commodity Exchange Act, or should they be treated as a swap? And not to kind of get too bogged down into nitty gritty regulatory details here, Jimmie. But as you well know, there's a difference between how futures are regulated and swaps are regulated. The main one being that futures are standardized contracts that trade on exchanges and are all centrally cleared. Right. Swaps, they may or may not be centrally cleared. They're more bilaterally negotiated, and there's additional restrictions on counterparties and kind of counterparty credit risk there. So what happened, Jimmie, is the CFTC put out a policy statement this week, and they approved the Kalshi and the Coinbase listing. Now, in true CFTC fashion, Mike Seelig has to write an op-ed in CoinDesk, sort of touting this announcement, right? And the op-ed is titled "What American Crypto Asset Perpetuals Mean for the Future of Crypto." And, it's just some typical pablum from Seelig on, embracing innovation, this, just kind of nonsense. he references the fact that Robert Shiller, famous economist, actually was the one who came up with the idea for perpetual futures.
Decades ago.
Can someone get him on record on this, by the way? Like,
Bob Shiller?
Yeah, well, I'd love his thoughts on his idea being applied to crypto here. So then he goes on to say, Selig goes on to say, referencing Shiller, he goes, since then, perpetuals have become a foundational risk management and price discovery tool in the global crypto asset markets. That sentence is complete bullshit. Okay, complete bullshit. These are speculative instruments. Okay, these serve no purpose other than straight up speculation. The fact that who is using perpetual futures for risk management, Jimmie? I honestly have not heard that at all. And this lends me to the clip I sent you from CNBC, Terry Duffy, right? Terry Duffy, and look, obviously this is competition for him, and I thought the host of the show did a good job kind of framing that way. And he's like, look, yeah, obviously, but I've been in this business 30 years. Like, competition is just, that's every day when you're in finance, right?
Yeah, I mean,
but his point though was the funding rate makes it so it's not, the funding rate mechanism makes it so that it can't be a hedge, right? Like if you're actually in the money, you have to pay up. Like how is that a useful hedging tool when if you're right, you have to pay?
Yeah, but if you're wrong, if you're long and wrong, it's insurance. Right? If you're long, if you were holding Bitcoin, and you would have insurance.
So if you have if you're holding underlying Bitcoin,
that's what I'm saying. If you do have true,
well, why would you want to do that?
Well, I mean, why would anybody buy puts? Same reason.
Well, you're speculating on the,
No, I mean, but you still want to be a little risk averse, and you buy, if I'm long, a stock, IBM, and
but that's a lot. That insurance is a lot cheaper than perp.
Yeah, I mean it is, but
If I have Bitcoin, I can buy
Okay, let me put it to you.
I could buy a put option on the BlackRock Bitcoin ETF. Right. I bet
you could do that.
I could do that. It would be out of the money, and I don't know, cost me,
and it would expire.
And it would expire. But it would cost me like, depending on, the tenor and how deep out of the money, let's just like $10 or something like that. Right. So it could be a pretty affordable form of insurance. Whereas opposed, if I go, short a perp, I mean, that's going to be a lot more expensive, isn't it?
Yeah. Well, no, because I don't think so. I don't think so. I don't think it is because you can I mean, I don't know how they're doing these, and different exchanges probably do them in a different way. But it's like if a farmer is knows he's going to harvest so much corn and he wants to lock in the price of the corn now for some future delivery, that's a way to do it, right? You sell it, you sell that, or at least part of it. The other thing I think the argument between futures and swaps. So you were talking, that this looks like a swap, not really a futures contract. There is a very vested reason why people want this to be a future, not a swap, and that's the tax treatment. Here in the U.S., if a futures contract, part of it's taxed as long-term capital gains, part of it as short-term, whereas a swap, 100% of it is taxed as ordinary income.
Interesting.
And so I honestly think that's a bigger driver than anything else is the tax.
That's a good point. Yeah, I haven't heard that point. That's a really good point. Let's be honest, tax does drive a lot of behavior in our economy, right? So,
especially in finance.
Yeah, I mean, I think, look, it's just a matter of some of these, like the Kelshys, the Coinbases of the world are just looking at the massive volume in perpetual futures overseas and saying, look, we're missing out. And that was a big part of what Selig was saying, which is like, look, our U.S. intermediaries here are at a competitive disadvantage. So the big news, of course, then is, okay, the CFTC saying, hey, we actually think these things are futures. Not swaps. Therefore, they can be listed on DCMs, which is just derivatives exchanges available to retail, essentially cleared. I think both Kelshi and Coinbase are using their own clearing. I think they have an affiliated clearing entity. I didn't quite pick up on who was clearing them, but
I think they do clear that for themselves.
And so they also put out, the CFTC, Jimmie, put out an interesting policy statement on the listing of perpetual contracts. And Again, not to get into the details, but under the Commodity Exchange Act, there's a process in place by which DCMs can list new products. Okay. And it's called self-certification, where they basically sign off on it themselves and say, hey, we reviewed it. We think it complies with all the applicable CFTC regulations. And it's essentially a fast track process. You can also submit voluntarily to the CFTC for pre-approval. And, what the CFTC said in this policy statement is like, look, for anything that's beyond Bitcoin, we actually want you, DCMs, so derivatives exchanges, to come to us first, right? Before you list any other perps. And they made a couple of good points, Jimmie, which is you have to be able to list things that are not readily susceptible to manipulation.
Yeah.
And the whole premise of perps is that they're 24/7. And so you need then a index, a reference rate, a reference price that is also 24/7 and liquid, right? Because of course, if you can manipulate the reference price, then of course you can manipulate the price of the perp, right? And the point that they make in the policy statement, amongst others, is look, Bitcoin, it's a global market. It trades 24/7. It's a fairly deep market. Therefore, we feel comfortable allowing perpetual futures on Bitcoin because the underlying reference price will always be like, it'll be hard to manipulate.
It's always live. It's always dynamic.
It's always live. It's always dynamic. It'd be hard to manipulate that. Not so, of course, with other, with other commodities. And I think this is one of the arguments you hear against perps from a lot of folks in the industry. Like, let's just go back to like the farmer example, right?
Yeah.
Let's say it's like corn or like livestock. Those are not 24/7 markets, right? And like, do you want a farmer to like be waking up in the morning to see like, man, like, because of something that happened in the perpetual futures market, the price of like their crops now has like, moved 10-20%. I mean, that's a little, I'm exaggerating a little bit, but that's a factor.
I think that the idea of having to have these, pre-approved to ensure that there are, deep 24/7 markets is necessary. I can see this going though to other commodities. Oil, gas, things like that actually do trade 24/7. FX trades 24/7. I could see, and those are very deep. I could see some of those others, people looking at, hey, wait a minute, this is a cheaper way for me to get exposure or to hedge things. And I could see this becoming another, fairly significant product.
Well, and let's talk about Hyperliquid, because that's the Wall Street Journal had a good profile on Hyperliquid, and that's exactly what's happening there.
Yep.
Right. I mean, we are seeing massive volumes.
How'd you like that statement from the head of ICE?
What did he say in there? I'm trying to find.
This is the one where he was given the speech, and he drew out the fact that Hyperliquid's trading actually exceeds that of NASDAQ.
Yeah, I think, and we've talked about Hyperliquid on the show before, but just the broader finance community is just not aware, I think, of the volume that's happening on Hyperliquid and how important it is. So it exceeds the NASDAQ, as you said. The ICE CEO is saying, like, look, the volumes that's happening here, exceeds what's happening on the NASDAQ, which is crazy when you think about it. And oil derivatives, perps is a big product there.
Huge.
And obviously, what we're seeing now is these pre-IPO perpetual futures, right? Yep. So SpaceX, everyone's talking about the SpaceX IPO, which is going to be happening next week. Hey, if you want to get exposure to that, or if you have strong views on what's going to happen on that first day of the IPO, you can express that belief right now via perpetual futures on Hyperliquid. Now, it is not available to U.S. users, although, of course, as we know, Jimmie, a lot of U.S. people are using VPNs to get around that.
Do people do that? Lee,
I've heard that.
Lee, are you using your VPN for that?
No. I'm a boring guy. I'm boring with my money. But yes, it's been told to me that people do use VPNs to access these things. And of course, overseas, there's really no such restrictions. So, so people are already speculating on what's going to happen to the SpaceX IPO, Jimmie.
Yeah.
And I think, look, there's a lot of things to be said about Hyperliquid. from a regulatory standpoint, look, they are a threat. This is competition, no doubt about it. I mean, this is not some, rinky-dink DeFi platform here.
No, this is huge. This is a
this
huge
is
market.
huge. This is anyone who, this is competition to Robinhood. This is competition to Coinbase, right? I mean, you name it, this is legit competition.
Yeah.
It does have, according to the article, again, I haven't used it, very user-friendly interface, right? It's all, allegedly on blockchain rails. There's a governance token, right? Because it's crypto. There's got to be a governance token. The Hype token has done very well over the past year. And the question, I think now, Jimmie, in light of the CFTC allowing Bitcoin perpetual futures, when we look at what's going on in Hyperliquid, we're saying, hey, is that type of stuff coming here to the US, right? Is it just a matter of time, right? And maybe it's not necessarily Hyperliquid per se, but to your point, hey, if we're seeing these massive volumes in oil perpetual futures or, pre-IPO perpetual futures, why shouldn't the question, now I have strong views, I'm sure you do too, why shouldn't we allow the Coinbases, the Robinhoods of the world to also offer perpetual futures on, whatever they want, basically?
Yeah. It's a question that is, with us right now. What do you think? How should people think about this in terms of customers and things like that? I always think about it in terms of retail more than institutional side of things. In the retail side, I mean, when institutional things go for institutions, when things go wrong, they typically are like, yeah, things went wrong. I'm an institution. I have the wherewithal to understand this. On the retail side, what happens? They sue, and they sue big. And I think of things like auction rate securities. When auction rate securities went bad, I mean, brokerage firms ended up having to repurchase billions of dollars. Every brokerage firm was billions of dollars of these things. Could something like this happen if, a market got locked up, or if, something goes south in a really big way? I think it can. The other part is there are so many products out there, and I've said this for a long time. Retail brokers have one license, basically. They get a Series 7. And then they have to have state license, but basically they get a Series 7. And you can sell anything. You can sell any product. You can sell an option. You can sell a bond. You can sell stocks. You can now sell crypto, right? You can sell exposure to all these things. I don't think that's right. I don't think people have, and typically what they do is they'll focus on a corner of it, right? They'll everything will be ETFs, everything will be bonds, everything, because they can only get an expertise in so many things. And on the institutional side, when you're trading, you typically trade one thing, and it's very narrow. And you have a view of other things and how they affect it and correlations and things. I think on the retail side, I've always thought there should be more than one license. You are licensed to do equities. You are licensed to do ETFs. You are licensed to do bonds. And part of the reason is I don't think one person can know this much. I don't think you can have this much knowledge. And so
their agent can. Their AI agent can. Their AI agent can.
Yeah, their AI agent can. I mean, that is, I've certainly thought about that. That is one approach. You have to use an AI agent to do it. But I mean, do you really want to do that either? I don't think so. In particular, the fact that most financial advisors are not young guys. Right? I think the average financial advisor, I'm guessing, is closer to my age than yours.
Yeah.
And so, are they going to learn new tricks? I think some of them will. But I think it's just there are too many products out there,
look,
and this is a different product.
It's a risky product. The whole point is that there's embedded leverage, right? I mean, I think this is what makes it attractive. This is why the volumes are as high as they are. That's what the retail wants. They want they want to put as little down as possible and get as much exposure as possible. And perpetual futures give that to them. And some of the leverage is like 100 to 1. I mean, on overseas platforms, it's 100 to 1. Now, when I was reading the CFTC material, the approval orders for both Kalshi and Coinbase, as well as the policy statement, they did not actually say anything about the leverage and how much would be permissible. Now, there's nothing in the CFTC rulebook, as far as I know, that actually mandates or dictates what it can or should be. So I think it's really.
I think there is for futures. I mean, typically it's 20 to 1. Typically it's 20 to 1 for futures.
So maybe you might be right. But just
and I don't know
looking
if
at
that's
what
written
Coinbase. So I just went to the Coinbase. So Coinbase is
right.
saying it'll be 10-1. They haven't launched yet, but they got
Yeah,
approval. I think they're going to be launching soon here. But the Coinbase, kind of press release said it'll be 10 times leverage,
yeah,
right? So,
okay.
but
So
that's
less in the
still very
future, less in the listed future.
very risky. And again, you have to think about the contagion impact here too, Jimmy, because we saw this back in 10-10, right? October 10th, the big sell off we saw,
Yeah,
kind of originating in DeFi markets. Again, the whole point, folks, is the reference, the funding mechanism, right?
yeah.
To bring the perp along, align with the underlying. You need to, that needs to be pre-funded, right? You have to have, that amount, just like a margin account, right?
Mm-hmm.
And a lot of this works, automated. So it's not as if, you're going to get a polite call or polite email
No, it's automated. Yeah.
from your broker saying, hey, you need to deposit, X amount by, the end of the day, the end of the week. It's like, no, either you have it or you don't. And if you don't, then you get auto liquidated,
Mm-hmm.
right? You get auto liquidated, and then that can trigger obviously then this contagion impact. And so, these are all things that regulators need to be thinking about quite carefully, and how this is all interconnected. And Terry Duffy, the CEO of CME, and do you know Terry? I just assume you know everyone in finance.
I know I've met Terry. I don't know him.
Okay. And I don't know him either. I know obviously I've heard him talk a lot, and I always find him interesting, and obviously very bright and has a lot of experience that I think is certainly people should be paying attention to, and he's seen a lot over his career. He was on CNBC this week, and they were asking him about, again, the perpetual futures that the CFTC is allowing, and he said, "This is 2007 for retail." Those are, I mean, that's strong,
Yeah.
right? To say that this is 2007 for retail. He's like, just like 2007 for mortgages, this is 2007 for retail.
Yeah.
Right.
I really do feel like that. I just mentioned, the retail side of things. I do probably fixate on that more than a lot of people. People like to throw investors out there. There's retail and there's institutional, and those are like two different universes. And I mean, Lee, my background and how I think about these things, and I think it was whether it's 2007 or not, I don't know, but I will say I appreciate the fact that he's calling out the difference.
Yeah, and look, there's every week, Jimmy, we kind of get into the nitty gritty on these very specific issues, but I think it's sometimes important to take a step back because, we always joke about Back to the Future 2 and Biff's World,
Biff's
right?
World.
But just think of all the topics that have been recurring on this show, over the past couple months, right? Event contracts, right? Things going on in the AI. I mean, we don't talk a ton about AI.
We don't talk a lot about AI.
Coffee and crypto, but obviously we're seeing massive capex and AI sort of sustaining this stock market. SpaceX and some of the things you're seeing about the SpaceX IPO. Now we're talking about perpetual futures. I mean, look, these are all signs of froth, Jimmy.
Yeah.
I don't know, these are all signs that this is near a top, right? I mean, these are the type of things, the activities, the products, the behavior you see near the top. Now, of course, it's impossible to time. It's absolutely impossible to time. This market could rip for another, 12, 18 months, 2 years I don't know about 2 years, but so I'm not, again, nothing we say is investment advice. I'm not making any predictions about, there's a crash imminent, but I'm just saying we're seeing a lot of behavior. And by the way, we're seeing a lot of accommodation by the regulators too. I mean, this Mike Selig thing, I think the CFTC made a mistake here. They basically relied on the legal logic supplied to them by Kalshi and Coinbase, because I don't frankly understand how anything that doesn't expire can be considered a futures contract. But as they said in their approval orders, under the CEA doesn't actually define a future. The CEA doesn't require that there be an actual expiration date in order for something to qualify as a future. I just think it belies common sense and logic, though, that something could be considered a future if it doesn't actually expire. But we have regulators embracing and cheerleading this stuff. And all of this just makes me very, very nervous and very concerned for what's to come.
Yeah, I echo your concern there. I am, even though I'm a big free market guy, I do believe that they need to approach these things with caution. In particular, I think given how popular they are, right? I think they do need to approach these with caution, because once they get the seal of approval from the CFTC or the SEC in case of other type assets, I think that people do have, there is an implied level of security around those kinds of things, and it's just not here. We should probably, I don't know, maybe it's worth talking about, the way that options actually work and who wins and who loses, because there are winners and losers in every options contract and every futures contract, and it's usually the pros, folks, and then are the winners. And I think it's the same. It's going to be the same here. But as you said, I mean, the leverage effect. Not only does that leverage your capital going in, but it leverages your losses coming out, and that can be that can be dangerous for a lot of folks.
So be careful, folks. Be careful. And final point, Jimmie. And it's great that we did a whole episode just dedicated to perps. Hopefully, this wasn't too boring for folks.
I hope not.
And there's 8 stories we didn't get to, which is all good. The risk management piece, because this is what, and obviously derivatives have their origins in risk management, and you still hear people talk about that. And Mike Seelig, in his op-ed in CoinDesk talked about that. Bitcoin futures, Bitcoin perpetual futures, right? Like, I've always said the most natural, the most logical entity who actually has a hedging need or for risk management need are the miners, or the Bitcoin miners, right? But I've never actually seen any evidence whatsoever that miners are actually doing any hedging. Now, maybe folks email me if I'm wrong, okay, please. But again, to me, this is just all speculation. This is just a new gambling instrument out there to feed to the masses, and I just don't see people using this as a.
I think people would say that about a lot of things, though. A lot of things that are traded today, they're simply. I mean, and you can say gambling. You can say, I think for any kind of financial future, financial option, underlying financial instrument, there is it goes beyond gambling. It's not like you're betting everything on green, or on black or on red or something like that. I think there is there are different approaches.
Most of the activity is speculation, no doubt about it. I'll grant you that. But I think the contract itself, though, you could argue that there is someone out there who has a genuine hedging need, and this product is fulfilling a risk management purpose. With some of these crypto derivatives, I just don't think there's an actual genuine risk management.
I don't think there's a hedging need. I think there's a speculation.
It's like the same thing with vet contracts. It's absolutely not okay, how many rebounds LeBron James gets in a game? Who is that? What that contract is a risk management tool for whom?
That's totally different.
Exactly.
Yeah, I think that's totally different.
But I'm with you. There's a fine line between, or gray line, I guess, between speculation and risk management. And it's funny,
hedging. When you go in and you do to trade in some kinds of derivatives, you actually have to declare if you're a speculator or hedger on an exchange. You have to declare what you are when you go in to trade that particular asset.
All right, Jimmie. Well, this was a lot of fun. I think by the time we chat next week, we will have a SpaceX IPO. Any predictions you want to make on that one?
I mean, it's going to go ballistic when it comes out. I mean, it will
big first day pop. What's your call for first day pop?
Huge first day pop. I think that the banks have lined it up that way to some extent, but I think there's so much hype around it. But it'll be interesting, because there have been a lot of things done pre-market. It'll be interesting to kind of take a half a step back and say, okay, if all of this pre-market activity hadn't taken place, what would have been the effect?
Yeah, I think this will be fascinating to take a look at, Hyperliquid and some of the stuff happening there, and see how that impacts the IPO price, if at all, right? Because I think based upon the current perps price on Hyperliquid, it's pricing at a pretty big pop, no doubt about it.
They're pricing in a huge pop right now. And I mean, we'll wait and see. I would expect that it will, but it will be interesting to see if it's somewhat muted because of all of the pre-market activity.
Yeah, fascinating stuff. All right, well, we'll cover it next week, as well as all the stories we didn't get to. Ton of stablecoin stories we didn't get to, Jimmie.
I know.
But there's always a stablecoin story. So, all right, brother, have a great weekend.
Hey,
let's go Canes. Go Canes.
Go Canes.
All right, brother.